Hi everyone, warmly welcome to the Banker channel. Today we are discussed about what is the financial system and how it behaves. The financial system has many parts that allow money to flow around the economy. The best known are banks, building societies and insurers. Others include pension funds, asset managers, investment banks, credit unions and hedge funds. All of these and more make up what we call the financial system. A healthy and stable financial system provides three key services to the economy. Number one is it makes payments from one person or business to another. Number two is it supplies finance to business and households, and third is it allows us to insure against risk. Each day the financial system settles millions of transactions, including spending in the shops and online, payment of bills, wages, benefits and withdrawals from ATMs and CDMs. The financial system brings savers and investors together to put money to work. One person's savings in a bank can become the investment in a business that will create new jobs, or a mortgage for house purchase. And savings can be invested in shares by pension funds to allow firms to grow. Insurance companies allow people to insure against the risks they face in their businesses or daily lives. Many worthwhile opportunities would be overlooked without the protection of insurance, which allows businesses to expand with more confidence and the economy to grow. If a large bank or insurer gets into serious difficulties, problems can spread rapidly across the financial system. Before long, even healthy banks can be starved of cash, and the whole financial system can get into trouble. Central banks and regulators work to keep the financial system stable. A stable financial system means households and businesses can have confidence their money is safe, insure against risk, and rely on access to finance when they need it in good times and in bad. Please subscribe, like and comment. Thank you for watching. Have a good day.